So halfway through a very tenuous ceasefire, but gas prices at worst seem to have stabilized. Joining us now, one of the nation's top oil and gas experts. You know him, our good friend, Gas Buddies Patrick De Haan. Good to see you, Patrick.
Thanks for having me.
You're the expert. But from my very simplistic analysis, it sure seems like prices are holding, maybe even down a penny or two. Why is that?
Yeah, to your point, average gas price in Syracuse actually down about a penny in the last week. It's nothing to write home about, but at this point, with prices having gone up, it's certainly nice to see them stop increasing. A lot of that really stems from the ceasefire last week, which caused the price of oil to plummet 15%. That basically started the reversal. We're starting to see a little bit more of a downside depending on where one lives in the country. The national average down about 8 cents a gallon in the last week. Syracuse not down too much. That may have to do with the pending switch over to summer gasoline, which happens here this week. There may not be much of a jolt to the upside. I will point out, though, that summer gasoline right now is priced at about a 12-cent a gallon premium to that of winter gasoline. But with oil prices plummeting, stations may have a little bit of cushion to at least absorb some of that potential increase, depending on what the price of oil does here in the next a day or so. So you may not notice as much of a jolt at the pump, although if oil prices were jumping, you'd probably notice it pretty significantly.
Oh boy, I'm glad they aren't. But there's still so much uncertainty about actually any kind of strategy on both sides in the war, and the strait is still basically closed. So you would expect the prices to maybe still be rising, but they're not. Why not?
Well, a lot of this is not only current supply and demand. We know the strait remains closed, but the market's also looking down the road, and it might be liking a little bit of what it's seeing. That is, the Iran regime has not yet retaliated against the U.S. port blocks, and Vice President Vance has signaled that the U.S. is open for more potential talks. So that's what the market's looking at, and it's trying to assess the risk of, are we going to go lower? Are we going to get a peace deal? And what the price of oil right now is telling you is that there's some optimism that there will be something sorted out. Now, the markets could swing wildly the other way if that doesn't happen. Let's hope and knock on wood that we can at least see a little bit of a decline here in the weeks ahead.
Curious, we've talked about gas prices, but we have also, you and I talked before about diesel prices. How are those looking right now?
Certainly not so pretty. Still pushing well above the $5 gallon mark, really closer to $6 right now than they are $5. There could be some relief there as well in the weeks ahead. Unlike gasoline, which tends to peak in the summer and bottom in the winter, diesel tends to be a little bit of the opposite. That is a peak in the winter when heating oil demand is higher. Heating oil and diesel are very similar. And then diesel prices tend to go down in the spring and bottom out in the summer. But a lot of what is contingent now via the Strait of Hormuz is going to impact diesel. Because of a barrel of oil, most of it gets turned into gasoline. That's why gasoline prices have been impacted, but to a smaller degree compared to diesel, which is less of a product. And jet fuel prices have nearly doubled because of that barrel of oil. Nearly the smallest cut of that goes into jet fuel. So disproportionate ways of reaction. That's why diesel is up more than gasoline. Production has been lower, and of course, a cold winter has put a lot of pressure on inventories.
Sure. I was caught by one of your observations you made earlier today about the U.S. being a really major exporter and kind of helping feed this global demand that's created by the war. How much can the U.S. continue to do that, and for how long?
Well, we can continue to do that. U.S. oil companies are going to sell to the highest market bidder, whether it's Americans or countries abroad. Now, of course, there is a cost to shipping it, which makes it more attractive for U.S. oil companies to sell their products here. Right now, in the last week, according to government data from the Energy Information Administration, the U.S. exported 89 million barrels of oil and refined products in just the last 7 days. So the U.S. is kind of filling the void left behind. But keep in mind, we're not at worry of a supply issue. There's still about 30 million barrels of oil in Cushing, Oklahoma. That's where kind of the delivery point for a lot of the oil that trades on the New York Mercantile Exchange is delivered. If you buy a contract for 1,000 barrels of crude oil, it gets delivered from Cushing, Oklahoma. That's where a lot of the storage facilities are. Still plenty of oil there, but certainly the U.S. is seeing a huge an increase in oil exports, total exports, because a lot of countries are looking to areas not affected by the strait, aka the United States.
Perfect. Patrick, always appreciate your insight. Thanks so much. We'll see you soon.
Appreciate you having me. Thanks.
Let's take a closer look at gas prices now. According to AAA, the average price of gas in Syracuse, $4.13 a gallon of regular, unchanged from yesterday. The national average, $4.11. Let's take a look at some of the lowest gas prices in the area. This is according to Gas Buddy. The SNK on Route 31 in Jordan, $3.83 a gallon. So is the Morabito on Bartell Road in Brewerton. MD's Market in North Syracuse is $3.86.
Download the WSYR Plus app on your TV to stream News Channel 9 for free. Just go to your smart TV, search WSYR Plus in the App Store, and download to start streaming today.